Okay, Nigel, thank you very much for having me back here and giving me the opportunity to tell my stainless story. And what I'm going to do is I tell you the stainless story not from the raw material perspective. You can draw your own conclusions then, but I will tell it from the market, you know, and actually from the side of the consumers, because we're pretty convinced that this is where the future happens. Okay, I start my presentation without a disclaimer. So you can pretty much hold me responsible for what I'm saying here. I think that's probably the advantage of being a small, privately owned company. First of all, for those of you who have not seen me speaking or know nothing about SMR, these friendly people you see on the wall here is my team, you know, that I built up actually since 1994. I started the company now 18 years ago. And these people, or let's say half of them, are market analysts, and they travel a lot. They travel 50% of the year. They travel to consumers of stainless and special steel to ask them about the future. That's our business model, and we have two companies, SMR and SMI. This is where we are in the Austrian Alps, not a bad place. I tell you, I still have 1 meter of snow in my garden at the moment, so it's no kidding. You know, it was a wonderful winter this year. And just since we have so many competitors of me in the room here, folks, we are hiring, so sorry I had to misuse this here a little bit, you know. So if you can imagine yourself living there and having a lot of fun every day, let me know. Actually, I mean, we have three parts of our business. SMR is doing customized market research. Here the customers come with their questions and we answer them. One by one, exclusive and customized projects. And this usually is if a steel mill, so 90% of what we do is for steel mills, if they want to invest in something, new equipment, go to a new market, buy a competitor, you know. At the moment, we are pretty busy with private equity firms who will look for targets in their industry. So also this is happening. SMI is a sister company of us, headed here by Wolfgang and his team, and they do multi-client studies. We have a very extensive China study. Some of you bought that one. We visit every year at least 50 Chinese stainless steel mills with a melt shop. And I just come back 2 weeks ago. I was 1 week again with all the big players there. I brought back a lot of new information and perspectives, and the cold as well, but you know, probably we talk about that a little bit later. And also I had the pleasure of visiting one of the biggest nickel pig iron plants now and seeing a little bit the future of this industry. So if we heard that nickel pig iron costs are 18,000, well, I tell you, there is a way of getting them down to 13,000. And the way, and this is the future, is to have nickel pig iron, the high grade with 12%, rotary kiln, electric arc, go into an AOD and melt immediately afterwards the slabs that you process them. So it's the combination in the future of nickel pig iron and stainless in one melt shop. That's the future there. So that won't go away. Okay, and then we do conferences. You know, I can show you at the end of my presentation what we are planning here. SMR is doing about 2.5 million euros in turnover per year, and we are growing. Business is good for us. And you see that stainless is about 70% of our business, but we do a lot these days also in nickel alloys. We have long-term contracts with some of the leading nickel alloy producers, actually number 1, number 3, and number 5 worldwide, and we provide them every year, every quarter actually. We have a nickel alloy database. Every quarter, the end-use analysis and forecast for nickel alloys in its subsegments, high-performance alloys, corrosion-resistant, heat-resistant, electronic, etc. So that is one of the strengths that we are doing. Okay, jumping on stainless. This curve you've seen before, probably not in that form. That splits the world into brick and rest. And you see, the first thing is brick growing at 15% per year, the rest of the world growing not at all, because a 1% growth is probably along the population growth. So that is the naked, ugly truth that we are facing. If you are a European producer or an American or a Japanese producer, you know, this is what you have to deal with. And the second thing is, for the first time in history, we had last year that the consumption of stainless in the BRIC countries was bigger than in the rest of the world. So that shows how that epicenter has moved, you know. And also we had a new record. All the figures I show you is not melt production. We are thinking only in finished products. Huh? So the 30 million tons that you see here of stainless is finished products. Now, the other big, let's say, mega trend in this business is this austenitic ratio, so the 300 series ratio. And when you look at, you know, finally in 1998, around the 2000s, you know, the stainless industry developed strategies to replace nickel. The nickel price got too high, too volatile. The volatility is probably more the problem than the level of the price. And you see with some short peaks that we've seen, these peaks, when it jumps up again, there are usually two reasons for that. Either the process industry is strong, like last year, that explains the uplift in the 300 series ratio last year, or like in 2006, it's upstocking. Because if the industry is upstocking, they're mostly upstocking austenitic grades and not ferritics. You know? So, but the trend is clear down here, and it looks a little bit like the 100-year-old love story or marriage between nickel and stainless has to some extent come to an end, and it's the stainless industry who has asked for the divorce, so to speak. So, but how that will go forward, I will address a little bit later. Just a snapshot on 2011, and you see still 300 series, main grades, 57% of the market, a little bit higher than in 2010, due to the fact that the process industry was outperforming in 2011. 400 series, the ferritics and martensitics, 27%. Then we have 200 series, still unexpectedly strong here, 15%. And when you look at, for example, in China right now, companies who always try to stay out of 200 series, like Baosteel, is producing virtually no 304 at the moment. And all they do on the cold roll side is 200 series. That's where they still can make some money. In 300 series, there is no money worldwide. Nobody makes money on 304 worldwide. That is really one of the problems that this industry is facing. I'm not talking the raw material industry, but the stainless steel industry. Here you see the regional changes, and you know that the 200 series are very important in India and in China. Also, they have different end-use segments. And the ferritics are strong in the States, Japan, for example, whilst Europe still has a relatively high austenitic ratio. So we're not going into product detail, but I just want to show you how complex that industry is. Last year we had a melt production, according to our figures, 35.5 million tons. This is higher than what you hear from ISSF, etc., because we are using our own figures on India and China, which has, I think, a little bit more direct know-how from the private sectors, from these people who use induction furnaces instead of electric arcs. And that's why it's a little bit higher. So the average yield of the industry was 85%. So they shipped just over 30 million tons into the market, of which 82% were so-called flat products and 18% were long products. If we talk dollars here, it's a $110 billion industry, or it was in 2011 a $110 billion industry. Now the problem of that industry is the commoditization. And we distinguish we split the stainless market into 55 individual segments, product segments. And in all of them, we are looking into, amongst other things, what's the price level, how do the customers select their suppliers. And you see there are three categories. One is a commodity product, where the buyer just selects by price. He doesn't give a premium to anyone. So who gives him, no matter whether it's a Chinese supplier, a European, he's a pure price buyer. And this is that red field, and this is a quite high field, specifically if you look into the flat product arena. Then you have value products. For value products, usually the domestic supplier gets a premium. So a washing machine maker in Germany gives a premium to Aparam or Inoxum. Yeah? That's a value product supplier. And then you have that tiny little, almost high value products. These are products where still the suppliers, the steel mill, sets the price. They say, look, if you want that product, a special grade, Allegheny from the States is a typical company which is strong in there. Yeah, this is my price, and this price has my profit component in. You know, take it or leave it. That still exists. But the problem is that if you look at long product, that is only 20%, and in flat product, only 11% of the industry are these high-value products. So this is something that the industry had to deal with in the last 20 years, that commoditization that has changed the structure. And this is also a result of course, that the Chinese have learned to produce quality products. They became a legitimate alternative to domestic suppliers in North America or in Europe, addressing particularly the red segment here. Yeah? That is one of the problems, and this explains also why the profitability in long products is better than in flat products. Long products is something, it's only 20% of the industry volume-wise, but it's very often forgotten also by the raw material industry. So 50% of stainless is commodities. So what kind of growth do we see? And here we are always showing the real growth, that means net of any up and destocking. So we're talking here real consumption. 2010, that was the year of the recovery, first year of the recovery. You know, strong growth all over the world, total world growth 17%, after a decline in 2009 in most parts of the world except China. 2011, last year, that slowed already, and I tell you, we are doing that from the demand side. Yeah? So the results of that is that we are estimating 55 segments in these regions, and then we sum it up. And so our forecasts are usually, I have to say, pretty good. We always benchmark, of course, what did we say a year ago. And a year ago, we got it almost correct completely worldwide. The only thing is we were very lucky in America, because what happened there was totally unexpected. The strongest growing market in 2011 was not China, percentage-wise, it was the United States. And that was a total surprise. But on the other side, the disappointment last year was in Brazil. So that balanced itself out. But you see, it was a lot more dynamic than Europe, for example. China is slowing, but on a very high level. And then we have in the others here, India is included there. So what do we see for this year? This year we think further slowdown everywhere, significant slowdown in China, but still, from these 1.3 million tons extra that will be consumed in 2012, 630,000 will be in China. It's just simply the level there. Virtually no growth in Europe. Still more dynamics in the Americas here. Also, the rest of Asia is improving a little bit. I mean, Japan had a quite strong negative growth last year, and it's a big market in Asia, so that will bring that back up again. And then India also. India is not really getting into double-digit growth rates, you know. So that's India is not China and will never be, so to speak, but it's one of the dynamic areas in the world. Okay, this just shows where we are in terms of pre-crisis levels. These are the top 10 markets worldwide last year. China, Europe, India. India has overtaken already the United States. The United States itself has overtaken Japan, who was declining. And then you see Korea, Taiwan, Brazil, Thailand, and CIS is this former, you know, Russian sphere, so to speak. Looking forward to 2016, not much change. China, even at the reduced growth, is the main growth driver in terms of additional volume. Europe sluggish, India growing moderately, so to speak. And the only changes we see in positions here is the CIS moving up. We are pretty optimistic for Russia and developments in Russia for the next 5 years. There are various factors that this market finally is accelerating its growth. Excuse me. So. Okay, you know, the problem is that in Shanghai, they don't have heating systems. So you sit the whole day in meetings at 0 degrees with everything on you can, and then sometimes they open the windows and things like that. So it's, I plan your trips to Shanghai not in February, you know, that is not the best time. Okay. The worldwide price situation, we are having a price census where we ask more than 100 distributors and consumers every month to give us various prices. The benchmark is 304, and you see that in Europe, it came, and this is now the February price, came up because of the nickel price increases before. That's an alloy surcharge thing. And the European market closed the gap again to the American. So basically the European and the American price level is the same, you know, with short deviations. Structurally, the Asian price is always below that. Yeah? And this is a mixture of Asian prices. The domestic Chinese price is even a little bit lower than that. And the price difference is between Asia and the US about $500 per ton, and between Europe and Asia about 420. Now, sounds a lot, but you have to consider if a Chinese producer sells into Europe, he's not getting the same price than the Europeans. So they always deduct a risk premium or discount from that. But still, we are at a difference where the Asians are interested to sell into Europe and North America, so they are preventing at the moment any prices from really rising in Europe. They kept the price to the top side. This is the European market. I want to focus on that really long term, as you can see here. And there were several phases here. First of all, you know, second oil crisis, stagnant market. Then we had a pretty good time during the 80s, where, you know, the domestic demand was getting stronger. Stainless gained new applications in architecture and also some industrial uses. And then came the first Gulf War. There was a recession. There were several years which were pretty flat. And then the golden 90s. And the 90s was really when the European industry of process equipment also started to build up the emerging countries. So that was the emerging country and also Chinese effect that came to an end when we had the recession after the second Gulf War. And then, you see, we ran pretty flat into the first half of the 2005s. What happened thereafter, this peak, had nothing to do with any demand. It was purely upstocking. It was purely, you know, speculative behavior throughout the supply chain. And so, if people say pre-crisis levels is that 7 million tons of consumption in Europe, we never had a 7 million ton consumption in Europe. 1 million tons, at least of that, was refilling our supply chain, not only refilling, but overfilling it. Yeah? And then what happened afterwards, you know, with the nickel bubble burst in July 2007, and then came the financial crisis, we had a long period of destocking. So the structural demand in Europe, if you look at that, you see it has leveled off at around 6 million tons. So if we are talking about the capacities in Europe, yeah, it should adjust, they should be adjusted to maximum that, because also looking forward, you know, Europe will be pretty much a stagnating area. The only growth in Europe we see in the East, there are, I mean, Poland, Czech Republic still, and Turkey is the success story. Turkey is the fastest growing market at the moment, whilst others are structurally shrinking. This country, the UK, is amongst them, unfortunately. France, for example. The biggest risk at the moment in Italy, for me. Italy is the second biggest market after Germany, and Italy at the moment, short term also for me, has quite a potential to draw the whole European market down in 2012. This is the European market. These are the mills. The blue ones are flat. The amber ones are red on a little bit of different scale. And you see, you could say too many mills are chasing too little market here. So something has changed in this system, in this structure, and I guarantee you if I show you that in 5 years again, it will look different. And I don't think we see more players. Probably one, and this is in Turkey. That's the investment of POSCO. But for the rest of the mills here, I think all these production systems are at the moment under scrutiny. Who are the biggest producers worldwide? You see, number one in 2011 now was Tisco. Finally, they overtook POSCO. POSCO was last year number one, but they're almost on the same side. So Tisco, POSCO, the United Group with the plant in Taiwan and in China, the Bao Steel Group, including already the Zhejiang plant, which they bought last year, Inoxum, Acerinox, Aparam, and Outokumpu. Let's say these are the big mills. Everything else is then more or less mid-size mills. This is the capacity that they have under control at the moment, and you see that the capacity utilization Also in China, like when you look at Baosteel's free capacity, it's enormous at the moment. Yeah? And some of the mills could produce twice as much than what they actually do. Now this is the problem that we need to address. And in this situation, we have investments going on, and these are just investments by the existing players. Tisco in 2 steps with new AODs will go up to 4.5 million tons to 2015. Baosteel wants to go up to the same level, but they don't know where. The fact is, and I've been there 2 weeks ago, they have to close down the whole plant that they built only 9 years ago in Shanghai. Yeah? Very modern. From blast, they have blast furnaces, they have an SMS CMAC melt shop, 1.5 million tons, wonderful, and all this equipment has to be shut down and moved somewhere else because it's on land that needs that the government of Shanghai needs, or Baoshan in this case, needs for urban development. But they don't know, shall they move it to Zhejiang, where they have the nickel pig iron plant, or somewhere else, because what we heard before, this ban of ore from Indonesia, and they need the high grade from Indonesia, you know, could have the effect that the nickel pig iron plant in Zhejiang cannot be expanded, you know. So the alternative for Baosteel would definitely be to go to Indonesia and build the melt shop there. And the melt shop, that means not only nickel pig iron, as I said, it's MPI and immediately the melt shop for stainless, making slabs and shipping them back to China. So it could well be that in 5 years from now, we have Indonesia as a major stainless steel producer of austenitic grades on the wall here with the policies they do. Okay, other investments. Acerinox wants to build the melt shop in Malaysia, but also here I probably would recommend to the management, look at Indonesia, you know, because it's a way of making sure that you're less dependent on the LME and probably more in control of your nickel prices yourself. And environmental issues, you know, in Indonesia obviously are not a big issue as they are in China at the moment. Jindal, I just visited this massive plant in Orissa. The problem there is they spent over 2 billion because they had to build a power plant, they built a ferrochrome plant there. It is massive. And with that enormous investment, they have only 130,000 tons of cold roll capacity at the moment. So it's a little bit, you know, from the strategy how they built it. I think they are heavily into hot rolled products, which don't really make money, and too little cold rolled, but the plant is there, and it's with very little investment they can go to 2 million tons there. So we have these various expansion projects, and you see where the music is playing here. This indicates who are Asians, you know, and you can pretty much say 100% is going on in Asia. Unused capacity in Europe, it came down from 4.5 million tons to 3 million tons this year, you know. Also in America it came down a little bit. China is continuously increasing since they build more new capacities as we speak than what the market is growing, like the Fushan nickel stainless plant, which is commissioned this year. It's a 1 million ton facility, very modern, you know, Taiwanese investment and so on. So they have now at the moment 7 million tons of unused capacity. Other Asia too, so the total world has 16 million tons of unused stainless capacity. And not only the problem is in Europe. That what we are seeing in Europe at the moment is reorganization starting, you know. They have to do the same thing in China and particularly in the rest of Asia, Japan as well. Profitability, also not a nice picture. You know, if you're an investor in this industry, you are not happy, and I am. So this is really, you know, most of them, and we don't have to go into detail, Outokumpu, Aparam. And Aparam, you have to see, sometimes people say Aparam is better than the rest. The results of Aparam include Brazil. So that lifts the whole line a little bit. If you take Brazil out, but we don't know the exact results from their Brazilian facility, they would be exactly in line with the other Europeans here. So there is no money to be made in this market in Europe. The only benchmark that shows me a little bit always what is possible in stainless steel is North American stainless. They are constantly profitable. They are perfectly designed. They are in a good market, North America, yeah? And so I think what is possible at the moment, what you can make in stainless, is about $200 to $300 dollars per ton EBITDA. Yeah? If you do everything right, and NAS basically does everything right, this is the industry benchmark. And overall speaking, this is not an acceptable situation. This situation has to be changed, and it will be changed, that's for sure. When you look throughout the supply chain, these are the stainless producers. This is now EBIT in percent of sales here, and you know, we are just a little bit over the waterline here for 2011. Here are the distributors, not good at all. The raw material industry is on a different level. It's usually 7 times higher the EBIT margins that you have in raw materials. And these, I picked only companies who are in raw materials for stainless. So there is not iron ore in there or something like that. So it shows sustainable. That's where, you know, we should go to. And the scrap industry asked me to put them in as well, so that nobody thinks that scrap business is as profitable as the moly, nickel, and chrome business. You know, no. They suffer with the stainless industry, and you see the profitability is not good there either. This is our forecast for the capacity reductions and adjustments, let's say it that way, that are possible over the next 5 years, and what we think is going to happen. So just for example, going through Europe here, Europe has now 8.3 million tons of melt capacity, slab capacity. We're only talking flat products here, yeah? And the utilization of that is only 65%. That was for the whole year 2011. We believe that 5 years out from now, this capacity will have been reduced to 5.3 million tons. The capacity utilization will be very high. Money will be made again. Yeah? And so we see for Europe particularly a chance that the situation is improving. Outokumpu started with the initiative. That will not be the last step that we are seeing here, you know, of a consolidation, but everybody also has to do its homework. And for example, Acerinox did it already. The plant in Spain is no longer a 1 million ton plant. They have changed the shift schedule and everything that way and flexibilized it, that they are profitable now at 70% of what they used to do. So in the future, it's not that you 100% utilize your facilities, it's that you make money. And this is the key for the organization in the company. It's the equipment. The engineering companies are now working on designing melt shops, because the melt shop is usually the problem. That's the least flexible unit in a stainless steel mill. It's easy to reduce the shifts in a cold rolling mill, yeah? But the melt shop, if you reduce the shifts, your unit costs go up. But of course, the other thing is the overheads at all. Companies like, let's say, Acerinox, who have relatively low overhead costs, are more flexible than other companies who have relatively high overhead. So it's not that easy, I understand that, but I believe that some facilities will be permanently shut down, others will just not be 100% utilized, you know, and profitability is definitely, possible in Europe. When you look forward here in the United States, I'm a little bit more skeptic here, unless one of the existing players exits the business. Here, I think that also 5 years out from now, the capacity utilization on the melt shop level will still be less than 60%. China is okay at around 80. Other Asia, only if they reduce capacity, will be 87. And then we have India also will suffer from low capacity utilizations even going forward. So what's happening, or this is the pricing system in Europe, which in my opinion needs strong reform. It always served the industry very well to have a very high alloy surcharge, because the alloy surcharge was more the source of profits than the base price. But this is unhealthy for an industry, because the alloy surcharge is not in the hands of the producers. If it's high, okay, they're happy, they get some profits from that, because the way it's calculated is not reflecting the true costs they have. So there is a built-in profit component. But where the profit should be is in the base price. And I believe and hope that this consolidation that we are having, if Inoxum and Outokumpu becomes one, and we have a clear market leader here in Europe, that they will be able to change the system, either reform the alloy surcharge, put more into the base price, or why not completely get rid of it? Why not completely get rid of the alloy surcharge and just make an effective price? I think a confident, strong industry should be able to make a monthly price, you know, based on what the market situation is, and to get a fair price for the products that they are producing, plus the services that they are providing. Because that's, of course, the way forward for the European producers, is to provide a service to the consumers so that they are the better choice compared with the Chinese or some overseas suppliers. For a certain part of the market, that is certainly true. Cost position, that's the industry cost curve for 3 or 4 coils. Yeah? You see that all the Chinese are here leading. That is based on 20,000. We are not so far from this level of nickel. And there are various reasons for that. And this excludes the private companies. These are just the big Chinese mills. The first reason is in raw materials, very easy to say, nickel pig iron, okay? There are various kinds of nickel pig iron, low grade, high grade, but the high grade has now, as I said, 12% of nickel. And this high grade you can use up to about 40%, so you cannot bring all your nickel units in with that. For 2 reasons, impurities, and the second is too much iron. You know, you would mess up your iron balance. So, but up to 40%, 45 in some cases, they are using nickel pig iron, and that brings in that advantage. But the same thing what we heard from Catherine before, or what she's shown, also the moly price in China is lower than in the rest of the world. The chrome price consistently 10 cents below the rest of the world, you know, and because over there they don't care what Metal Bulletin, or excuse me, Metal Pages is writing, you know, what the chrome price that a Tisco or a Bauer Steel is paying is done differently, you know. They put out that tender and that's what they accept, and that you will not read in any publication. So they have consistent raw material cost advantages. Also, Tisco and Bauer Steel have shares in Jinchuan nickel with a special pricing formula, so that comes from that. The second, easy, labor cost. You see the yellow part here. The Chinese are still low, but now Bauer Steel pays at the moment $14 per hour. $14 per hour. Yeah? So this is eroding, and it's really going up by 15% per year. So this cost advantage in 5 years from now will be gone. Yeah? And then on the last thing, and this is something where I see some unfairness, is the overhead costs. This is financing, depreciation, overhead labor, etc. And when I calculate the interest rate that somebody like a Bauer Steel or Tisco is paying today, it's 0.6 to 0.8%. This is a kind of a capital market that nobody else in the world has access to, and because of that, and it's a subsidy. It is classified as a subsidy and a breach of WTO rules. And also the depreciation. They're not depreciating over 10, 15 years. They depreciate over 50 years. Now, this probably is not breaking the rules, but it's a kind of artificially lowering your costs. Compared to the things, this is where the Europeans are today. 20 years, the Europeans were the cost leaders, no doubt about that, or even 10 years ago. So that has fundamentally changed. And this is why the Chinese and some other Asians can do the prices they do. Where do we stand in the business cycle at the moment? This is the PMI. And you see here first, Europe, the mood has increased at the beginning of the year again after, you know, the 50% is the waterline here. Yeah? So we are below the waterline. The European industry will contract slowly, slightly over into the summer or so, but it has let's say the slide has been stopped. In America, we are on a better level. There, the consumer confidence and everything is better. The companies had an exceptional year 2011. I tell you, some of the consumers of stainless, like the chemical industry, they are sitting on cash. You know, they had a ball last year. So this is a healthy system actually, and I think the current government will make sure that this positive mood will last until the elections in November. So we're more positive for the United States than we are for Europe. China, surprisingly, you know, around stagnation levels here. But what happens there is the government has set the target at 7.5%, and you can be sure it will be 7.5% plus at the end of the year, because they have the means the money, and they have the consumers, means the people, to stimulate whatever they want. If they want to get it back to over 10%, they can do it as well. You know? So here I'm pretty sure that this will hold. Looking into this austenitic ratio, which is very important for nickel, and you know, to put it in perspective, about 58% of all nickel is used in stainless. It's no longer 75, 80, primary nickel. Yeah? If you put scrap also in, then it's about 73%. Yeah? So 58% of primary nickel, 73%, including scrap of nickel, is used in stainless steel. So this is a very important ratio, you know. We believe that after that peak of 2011 that you see here, which was caused by a strength in process industries, it will still go down. There are still, we have dozens of examples where people still replace nickel out of their existing applications. Yeah? But, and you see also there will be 2018-19 a turning point for that. So that's good news for the nickel industry, with afterwards a stable or probably potentially even rising austenitic ratio. So the substitution goes on, but I think the point will be in India, when these chrome manganese steels, which are really inferior, will be replaced mostly by ferritics for pots, pans, cutlery, but some of it, because of the deep-drawn properties, will also go to austenitic. So that will mark a turning point. And then after 2020, we believe that the e-mobility, electromobility, will have an impact on things like exhaust systems. So probably this is growing slower than the austenitics. So we believe that also in 10 and 20, 30 years from now, austenitic stainless steels will still be the workhorses in this industry. So the nickel industry has its market. That was the good news for nickel. Here comes a little bit not so good news, and this is scrap. We have a very extensive scrap model that is simulating first-use scrap, end-use scrap, and blends, yeah, rework as well. And here you see this is the scrap availability that we foresee between now and 2030, growing at 3.5% per year. At the same time, the austenitic stainless production will grow, but only at about 3.1% a year. And that shows that the average scrap ratio, which is around 55% for 2011, will tend towards 60%. So that means the usage of scrap in producing stainless will increase, even if the Chinese stay with their nickel pig iron. You know, that has no impact on that. Because there's one rule in the scrap industry, and that is the scrap market at the end of the day is always sold out. That's a market that functions perfectly. The price is set exactly there, that at the end there are some swings in up and destocking, but they are relatively short. And at the end of the year, you know, the scrap that was available has also been remelted, you know. And this is why I believe that the scrap dynamics should not be forgotten in any analysis that you're doing on nickel and molybdenum as well. In moly, I have to say, the primary moly use, we have only 20% in stainless, and about 26% if you include the scrap portion here. So it's probably not as dominant, or moly is not as dependent on stainless as nickel is, but also quite important. So that's our forecast for the grades here. The 200 series will see its peak around 2018-19 and go down then, and overall, 200 series, I have to say, is chrome manganese steels, because true 200 series have nickel. Most of what you see here has no nickel at all, or 0.7% or something like that. Then we have 3.1% for the 300 series, yeah, still growing, but here is the real growth. It is the ferritics. The ferritics are a gaining solution, and one reason for that is that the mills protect themselves from swings in their margins and profits. You know, one of the strategies of all the mills is develop ferritics, go on that, get out of 304, get out of 316. You know, there is no money there. Yeah? The money, on the more constant money, is in the ferritics, and also the stability in the margins. You know, that's the thing, because one thing is happening. The owners of steel mills in the future will be more investors, who they don't want to hear a story, you know, that everything will be okay in 5 years. They want to see next quarter positive, you know, and they want to have it stable. Yeah? And so getting into ferritics is one of the steps going there. And then we have the duplex, which has the highest growth rate here, almost double digit. duplex, including the lean duplex that have been developed now, will grow over proportionally, but even, you know, in the long way out, it will be a sort of a niche product. So it will not be that they are replacing a 304 as a workhorse grade. So you can draw your own conclusion what that means for your business. And if you want to hear more, we invite you to travel. You know, you can actually meet us all around the world. We have the first conference that we are doing here this year is in Rio de Janeiro, also not the worst place in the world. So, and it's, we are having a lot of interesting Brazilian consumer. Of course, Aparam will have the keynote speech, and Villares Metals, who's the long product producer there. You know, so we have the supply side, we have the distributors, we have a lot of interesting consumers giving presentations, including Petrobras, which is the mother of all companies there, so to speak, and the mother of all nickel consumers and moly consumers specifically. So that conference is in the beginning of June. In June also, we are then having our Singapore event backed up by Serinox. They will show us the new plant just across the border there in Malaysia. You know, and this will focus on the Asian scene. We have Bao Steel there, we have nickel pig iron producers there, so the whole raw material field in Asia is in the center of this conference, 26, 27 of June. And then we have the biggest event of the year always in Europe, and this year it will be in Stockholm. We are expecting again over 300 people there. It's a commercial event, and there we not only talk about stainless, but also about engineering steels, tool steels, and this. So this is a little bit wider in scope there, and that's mid of September. And then last but not least, we have moved after many, many years having the stainless conference in Pittsburgh. We decided to move it to Chicago. That's easier accessible, and so we will do that together with American Metal Market at the end of September in Chicago, which is mostly, of course, focused on the US and North American stainless steel market. Okay, with that, this was actually my story for today. If you have any questions, thank you very much.
Thank you, Markus. Do we have some questions after that very enlightening presentation? Down at the front there, John.
Hello, Markus. You mentioned disappointing demand in Brazil last year. Just wondered why that was and how you see it this year.
Well, first of all, there are various segments. The automotive industry underperformed for several reasons, but once Petrobras has postponed several projects, that was probably the main reason. And also the ethylene market, which is important there, so the biofuel. Many projects in the making for this year and the years to come, but last year they just have not been released. Don't ask me for the reason, you know, so these projects just face delays, that's it. So, yeah, ethylene was one of them, yeah. But they are, I think this year there will be 30 new ethylene plants being built, so stainless flows.
I have a question, if I may ask it. You mentioned that now over 50% of stainless steel could be treated as a commodity.
Yeah.
Does that mean that it can lend itself to trading on exchanges like the London Metal Exchange?
You had to ask that, especially since Chris is sitting there, right? Well, to be honest, I'm a little bit skeptic. There would be technically probably the possibility. Why not? Yeah? But I think that the stainless industry is not enthusiastic about that. And if I would be a stainless producer, I would be neither. Because if this industry, as we said, is consolidated, the industry will be able to make money again, and you want to be in charge of your own fate. And what is more important for an entrepreneur than to be able to set your own price based on your situation, on your product, on your, you know. And if you put a benchmark contract here for, it would be 304, I would say, a 304 slab or billet on the stock exchange. It could reflect the market situation, but I think if there are real market leaders, they could do better than that, what the stock exchange is doing for them. My personal opinion.
Interesting. Any further questions? I think we've got one over there.
Okay. Markus, I would like to ask a question about austenitic ratio and your prediction in 2016. We see it in China that already they replaced some 200 series by 300 series output. Maybe your prediction in 2016 already start in 2011?
Well, you wish for that, right? I don't think so. I think, in the next 5 years, the nickel substitution will outweigh, there are also examples where people are going back to austenitics. Water pipes is one of them, they tried really to push let's say 444 as an alternative for that, and it was rejected from the market, and they went back to 304 and 316 even, so. But I think this is outweighed by many applications where the ferritics are coming in. Don't forget also one thing, there are many applications where ferritics are now replacing other materials. I'll give you one example. Coffee machines, all these wonderful Nespresso machines, that are around, commercial and private, they used to have plastic or copper steam makers. They are now all going to 304 stainless steel. So that is one example, where to ferritic stainless steel, sorry, not to 304, unfortunately. So this is where new markets are also won, and they are rather won by ferritics than by austenitics. So I think you have to wait until 2017 before things get better on that front.
And my second question about Indonesia ban and your idea about transfer some stainless steel mills operation even in Indonesia. What do you think, where Chinese people find money for electricity plant in Indonesia for set up not only low-grade ferronickel production and even stainless steel production? It's billions of US dollars.
Indonesia is mainly high-grade, not low-grade. And I tell you, I guess that some of the private MPI producers, companies like Jingsan, that they will be the first. Jingsan has already 2 NPI plants. One is under construction now, and I've been there, in Wenzhou. It was fantastic. I mean, first of all, I didn't know that this nickel pig iron, what they call the iron ore, is mud. It's not like an ore that you say. It's like dirt, And they have this dirt there, 5 rotary kilns. And 8 hours later, approximately, after melting it in an electric arc, you have a 3 or 4 slab, so fantastic. And they're building a new plant, even knowing that probably in a year or 2 from now, they're not getting the ore anymore. And I said, and they are so profitable with doing that they say we get everything back within 1 year, the whole investment that we are doing there. So we don't care what is in 2014, 15. And then we built the plant in Indonesia. We're already talking to the government, etc., PP. So I think there is a likeliness. The problem at the moment is electricity. In Sulawesi, there is no electricity. The government doesn't want to build the plants. But there is coal there. There's plenty of coal there. So 250 million, that was the number I got from Bao Steel, they calculated that already, would be a sufficient power plant for a 1.5 million ton melt shop, similar to what they have in Baoshan now, starting integrated from that. The nickel pig iron is, the way they do it with the rotary kiln and the electric arc is an electricity game. It's about 3,600 to 4,500 kilowatt hours per ton of electricity that goes in there. So this is decisive, that you have low cost electricity, and therefore a captive power plant could be the solution there where you have the ore, make the slabs, ship the slabs. So the good thing about that ban from Indonesia is that probably in the future this material and this route is available not only for the Chinese, it will be available for everyone. And so probably even the Europeans should rethink their investment policy, what they do and where, because as I said, the costs that Jingsan has in that plant, they are break-even at $13,000 per ton nickel. So this is scary.
Markus, last question, maybe not question, remarks. Do you remember May 2011 in Shanghai and some nickel pig iron producer
yes.
who set up, in brackets, the already set up a nickel pig iron plant in Indonesia. And so what's the result of the things?
I know you are absolutely right on that. Nothing materialized from this company. I don't see behind the scenes what the problem was. So far, and there were attempts from Indians also. India wanted also, 2 producers actually wanted to build such a plant in Indonesia. So could well be that there are things behind the scenes which are hurdles to build it. But the Indonesian government obviously has a strong will to add the value in the country. So they cannot stop the export of the ore and prevent anyone from building a plant there, so either or. Probably it's not happening within the next 2 years, Dmitry. Probably it will take a little bit longer, but everything points to that direction now.
5-10 years.
You think 10? We discuss that next year. Okay.